But today we caught them. Ladies and gentlemen, we need to talk about what happened on Thursday, February 12, 2026. We need to talk about the crash that sent silver plunging from $85 down to $74. Because this wasn't a market movement. This wasn't profit-taking. This wasn't technical selling. This was a psyop. This was a military-grade psychological operation executed by the financial media to provide cover for the banks to exit their short positions. Here is the setup. Silver was flying. It had reclaimed $85. The shorts were bleeding. The inverse head and shoulders pattern we discussed was playing out perfectly. The banks were trapped. They needed a miracle to push the price down. And suddenly, out of nowhere, a headline hits the Bloomberg terminal. Russia considering return to U.S. dollar. Read that headline again. Russia considering a return to the U.S. dollar. This is the financial equivalent of saying the sun is considering rising in the West. It is absurd. It is laughable. Russia has spent the last 4 years de-dollarizing. They have been sanctioned. They have frozen assets. They have built an entire alternative payment system with China, BRICS Pay. The idea that Vladimir Putin would suddenly wake up and say, "You know what? Let's go back to using the currency of the country that is trying to destroy our economy," is the most ridiculous piece of fiction ever written. But the algorithms don't understand irony. The high-frequency trading bots that run the COMEX don't read history books. They scan keywords. And when those bots saw the words Russia and US dollar in the same sentence, their logic gates triggered a massive sell program. If Russia goes back to the dollar, dollar strength goes up. Gold and silver go down. Sell, sell, sell. In less than 60 seconds, billions of dollars of paper silver were dumped onto the market. The price collapsed. Stop losses were triggered. Retail investors, seeing the red candles, panicked and sold their physical ETFs. This is what we call spoofing the narrative. Usually spoofing involves placing fake orders. But this is next level. This is spoofing the news. They cited an internal Kremlin memo that nobody has seen. They cited unnamed sources familiar with the matter. They created a phantom document, wrapped it in the legitimacy of a Bloomberg byline, and used it to smash the price of real assets. Why? Why would they do this? Because they needed liquidity. They needed you to sell so they could buy. While you were reading that fake headline and panic selling your silver at $75, someone else was on the other side of that trade, thanking you for the discount. I know exactly how you felt when you saw that red candle slice through the chart. You felt a knot in your stomach. You felt that familiar sinking sensation that the game is rigged, that no matter how right you are about the fundamentals, the house always wins. You questioned your own sanity. You looked at the supply deficits. You looked at the mining data. You looked at the record demand from the East. And then you looked at the price crashing down to $74 and you asked yourself, "Am I the crazy one? Did I miss something?" I'm here to tell you that your anger is completely justified. Your frustration is mathematically correct. You're not crazy. You're being hunted. And the weapon they used to hunt you on Thursday was not a massive dump of physical silver. It wasn't a sudden discovery of a new massive mine. It wasn't a sudden halt in global industrial demand. It was a lie, a deliberate, calculated, and beautifully timed piece of fiction designed specifically to hack your emotions, trigger algorithmic selling, and steal your position. We need to dissect the anatomy of this lie. We need to look at the fake memo narrative that Bloomberg and Reuters pushed onto the global wires, and we need to tear it apart, piece by piece, until nothing is left but the absolute truth. Because once you understand exactly how they manufactured this panic, you will understand the lengths they will go to protect the paper illusion. And you will never fall for it again. Let's go back to the source of the crash. The headline flashed across the trading terminals and read, "Russia considering return to U.S. dollar settlement system. Sources." The article cited an internal Kremlin memo. Now, I want you to pause for a second and think about how the financial media actually operates. When a story this geopolitically seismic breaks, a story that completely reverses years of established national policy for a major nuclear superpower, you expect verifiable proof. You expect a primary source document. You expect a named high-ranking official speaking on the record. Instead, what did we get? We got whispers. We got unnamed sources familiar with the matter. We got an invisible, shadowy memo that no journalist was actually allowed to publish, quote directly, or verify. But in the modern era of high-frequency trading, verification takes too long. The algorithms do not care about journalistic integrity. The bots that control the liquidity on the COMEX do not call the Kremlin press office to ask for comment or clarification. They simply scrape the text. The natural language processing algorithms read the word Russia. They read the phrase US dollar. They read the word settlement, and they instantly execute pre-programmed logic. The bots are programmed with a very simple binary equation. If a major global power abandons its de-dollarization strategy and returns to the greenback, the global demand for the US dollar will surge. If the dollar index spikes, then inversely, the paper price of hard assets like gold and silver must instantly be crushed. Sell, sell, sell. In less than 60 seconds, billions of dollars in notional value of paper silver contracts were dumped onto the market. The price collapsed under the artificial weight. Technical stop losses were triggered, accelerating the plunge. Retail investors sitting at home, watching the red candles cascade down their screens, panicked and sold their physical ETFs at a massive loss. But we are not algorithms. We ask questions. We demand receipts. And when you actually look past the algorithmic panic and seek out the reality of the geopolitical situation, the entire Bloomberg narrative collapses in on itself like a dying star. We do not have to rely on rumors or invisible memos passed in dark hallways. We have the official, on-the-record statement from the one person who actually controls the monetary policy of the Russian Federation. We have the words of Elvira Nabiullina, the governor of the Russian Central Bank. When the Western media began aggressively spinning this fairy tale of a dollar return to save their short positions, she did not mince words. She did not leave an inch of room for ambiguity. She stepped up to the microphone and officially stated, "The Bank of Russia is not currently taking part in talks on the possibility for the return to US dollars. We are not participating in it so far. I need you to read those words carefully. Burn them into your memory. Not currently taking part in talks, not participating in it. This is not a subtle diplomatic pivot. This is a flat, categorical, aggressive denial." She just took a sledgehammer to the Bloomberg headline. The highest-ranking financial official in the country explicitly confirmed that the entire premise of the market crash was completely fabricated. You have to look at the geopolitical reality to understand just how insulting this lie was to anyone with even a basic understanding of macroeconomics. Why would Russia, after spending the last 4 years painstakingly building an alternative financial architecture, suddenly surrender? They have endured unprecedented, crippling sanctions. They have had hundreds of billions of dollars of their sovereign reserves frozen and threatened with confiscation by Western governments. They have been forcefully kicked out of the SWIFT payment network. In response to this financial warfare, they accelerated their alliance with China. They built the BRICS pay system. They hoarded physical gold at a historic, breathtaking rate. They began settling bilateral trade in rubles and yuan, effectively bypassing the Western banking cartel entirely. They endured the brutal economic pain of decoupling specifically so they would never be vulnerable to US dollar hegemony again. And the financial media expects us to believe that on a random Thursday in February, Vladimir Putin woke up, threw away years of strategic statecraft, abandoned his closest allies, and decided to go back to the system that actively tried to destroy his economy. It defies all logic. It defies common sense. It is geopolitical suicide. But the architects of this lie did not care about logic. They only cared about the reaction. They knew that the silver market was sitting on a powder keg with a lit fuse. The price was holding strong at $85. The physical vaults were bleeding ounces every single day. The inverse head and shoulders technical pattern we have been tracking was threatening to break out to the upside and trigger a massive short covering rally. The short sellers, the bullion banks, and the massive paper speculators were staring down the barrel of a massive, uncontainable squeeze that could wipe out billions in capital. They could not push the price down with fundamental arguments because the fundamentals are wildly, undeniably bullish. They could not push the price down by dumping physical metal onto the market because they simply do not have any metal left to sell. The East has taken it all. The only weapon they had left in their arsenal was psychological warfare. They needed to engineer a massive risk-off event. They needed you to sell your real assets for their fake paper. And who pays the price for this manipulation? You do. The retail investor who gets a push notification on their phone, sees the price dropping by the second, reads a terrifying, authoritative-sounding headline about a massive macroeconomic shift, and hits the sell button out of pure, unadulterated fear. They stole your shares. They stole your physical ETFs. They shook you out of your hard-earned position just when the mathematical reality was perfectly aligned for a historic breakout. They used your own perfectly rational human emotions against you. I need to stop here for a moment because what you just heard is not conspiracy theory. This is documented market manipulation. A fake news story coordinated across Bloomberg and Reuters. An official denial from the Russian central bank that the media conveniently buried, and a price crash that triggered billions in algorithmic selling. If you want to understand how the financial system actually works, not how they teach it in economics textbooks, but how it functions in the real world where billionaire banks manipulate markets with phantom headlines, you need to subscribe to this channel right now. Hit that subscribe button. Turn on all notifications. Because what I'm about to show you next is the smoking gun, the vault data that proves, beyond any shadow of doubt, that while they were telling you to sell, they were buying everything you panic sold. Now let me show you the heist. So we know they lied. We know the Russia memo was a fabrication. But the most important question isn't why they lied. The most important question is, what were they doing while you were reading the lie? Because in the financial markets, there are no coincidences. When the media creates a fire, it is usually because someone needs to run out the back door with the valuables. And on Thursday, while the Bloomberg terminals were burning with fake news, the back door of the COMEX was wide open. We have analyzed the daily vault data released by the CME Group for Thursday, February 12th, and what we found is not just a withdrawal, it is a heist. On the exact same day that the price was smashed by 10%, on the exact same day that retail investors were panic selling their ETFs, a staggering amount of physical metal vanished from the system. 2,598,017 ounces. 2.8 million ounces. Gone, withdrawn, loaded onto armored trucks and removed from the exchange's jurisdiction forever. Think about the logic of this for a second. If the Bloomberg story was true, if Russia was really going back to the dollar and the silver bull market was over, why would anyone take delivery of physical metal? If the price is crashing, you want cash, not heavy bars of silver that cost money to store. You only withdraw metal if you believe the price is going higher. You only withdraw metal if you are terrified that the exchange won't have it tomorrow. So while the news said sell, the whales said take it all. And who was the biggest buyer? Who was the entity standing there with the bucket while the public puked up their position? We broke down the data by depository, and one name stands out above all others: J.P. Morgan. Out of that 2.8 million ounce drain, 2.44 million ounces came directly out of the J.P. Morgan vault. Now you can interpret this two ways. 1. J.P. Morgan is moving metal for a massive client, maybe a tech company, maybe a sovereign nation that demanded immediate delivery. Or 2. J.P. Morgan itself is removing the metal from the registered category to the private category to hoard it for themselves. Either way, the signal is the same. The smash was cover for the grab. They used the fake news to lower the price. They used the lower price to fill a massive physical order at a discount. And they used the chaos to hide the fact that the registered inventory, the silver that is actually available for sale, has just collapsed. The registered category has now officially dropped to 92.8 million ounces. We are dangerously close to breaking below 90 million. We are watching the lifeblood of the exchange drain away in real time. This is the oldest trick in the book. It's called shaking the tree. They shake the tree with fear, with lies, with fake memos. The weak fruit falls. That's you. And they catch it at the bottom. You sold your silver because you thought Russia was pivoting. They bought your silver because they know the vaults are empty. You hold paper. They hold metal. Who do you think wins in the end? But if you think J.P. Morgan draining 2.4 million ounces is the biggest story of the week, you are thinking too small. Because while the banks are playing games with the COMEX inventory, a much larger, much more dangerous entity is preparing to enter the market. An entity that prints its own money. An entity that does not care about the price. An entity that buys silver not for profit, but for survival. We need to talk about the United States government. We have just received a bombshell analysis from the man known as the Silver Guru, David Morgan. If you have been in this sector for more than 5 minutes, you know who he is. He is one of the few analysts who has accurately predicted every major turn in this market for the last 3 decades. And in an exclusive interview released right in the middle of this chaos, he dropped a piece of intelligence that changes the entire investment thesis. First, let's look at his timeline. Morgan stated clearly that we are now entering the acceleration phase of the bull market. He cited the famous rule of commodities: 90% of the move comes in the last 10% of the time. He believes we have approximately 1.5 years remaining in this cycle. Think about what that means. We have spent 10 years grinding sideways. We have spent a decade waiting. And now, all of those gains, the entire repricing of silver from a monetary metal to a strategic asset, are going to be compressed into the next 18 months. If you blink, you will miss it. The consolidation we are seeing right now between $75 and $85 is not the end. It is the refueling stop before the final vertical ascent. But here is the bombshell. Here is the reason why the move is going to be so violent. Morgan pointed to a quiet, almost unnoticed policy change that happened in late 2025. The United States government officially classified silver as a critical mineral. For decades, they treated it as just another commodity. But now it is on the same list as lithium and cobalt. It is deemed essential to national security. You cannot build a Tomahawk missile without silver. You cannot build a satellite without silver. You cannot build the advanced solar arrays that power the grid without silver. And here is the terrifying reality that the Pentagon has just woken up to. The United States has zero strategic stockpile of silver. We sold it all. We used to have billions of ounces. Now we have none. We are 100% dependent on imports from Mexico, Canada, and indirectly, China. Morgan predicts that the U.S. government is about to initiate a massive strategic stockpiling program. They are going to become a price-insensitive buyer. When the Department of Defense needs metal, they don't look at the chart. They don't care if the price is $80 or $124. They simply hit the buy button until they have what they need. Morgan estimates that the U.S. government alone could need to acquire 100 million ounces to build a safe buffer. Let's do the math. The total free float of silver, the bars sitting in vaults that are actually available to be bought, is estimated to be less than 500 million ounces. If Uncle Sam steps in and demands 20% of the entire global inventory, what happens to the price? It doesn't just go up, it breaks the calculator. It creates a crowding out effect where Tesla, Apple, Samsung, and you are fighting for the scraps left over by the military-industrial complex. This is the endgame that we have been warning you about. The buyer of last resort is no longer the retail investor. It is the sovereign state, and this explains why the media is desperate to scare you out of your position. They need your silver because the government needs your silver. Every ounce you sell at $74 is an ounce that eventually ends up in a strategic stockpile at $500. You are literally front-running the United States government. Do not let them shake you out. But the U.S. isn't the only superpower racing against the clock. While Washington is waking up to the shortage, Beijing has been preparing for the reset for years. And we have a date. We have a cryptic deadline circulating in Chinese state media that suggests the financial military parade is scheduled for later this year. We need to talk about September 3rd, 2026. In the West, this is just a Thursday. But in China, September 3rd is Victory Day, the anniversary of the victory over Japan and the end of the century of humiliation. Usually, this day is marked with tanks rolling down Chang'an Avenue and fighter jets screaming overhead. But the chatter in the intelligence community suggests that this year the parade won't be military. It will be financial. We have been analyzing a series of articles published in Qiushi, the official theoretical journal of the Communist Party. This isn't a tabloid. This is where Xi Jinping publishes his direct orders to the party cadre. And in the latest issue, the rhetoric has shifted dramatically. The articles are no longer talking about gradual opening or integration. They are talking about financial sovereignty and pricing power. One commentary explicitly mentioned the need to break the stranglehold of foreign pricing mechanisms on strategic resources. What does that mean in plain English? It means they are tired of the price of the gold and silver in their vaults being determined by a paper casino in New York. The theory circulating among macro strategists is that China is preparing for a financial military parade on September 3rd. They aren't going to show off a new missile. They are going to show off the vaults. They are going to reveal the true extent of the gold and silver reserves they have been secretly accumulating for the last 20 years. They're going to say, we have 20,000 tons of gold. We have 1 billion ounces of silver. And from this day forward, the renminbi is backed by metal, not promises. This explains everything we are seeing in the market right now. It explains why they are draining the COMEX and the LBMA dry even at high prices. They are on a deadline. They have exactly 6 months left to finish their accumulation before they flip the switch. They know that once they make the announcement, once they challenge the dollar's hegemony with a hard asset-backed currency, the price of silver won't be $75. It won't even be $100. It will be unpurchasable. So look at the fake news crash on Thursday through this lens. Who benefits the most from a 10% drop in silver prices right now? The U.S. banks? Sure, they get to cover some shorts. But China benefits the most. Every time Bloomberg spoofs the price down, China can buy more metal for their September reveal at a discount. They are using the West's corruption to fund their own ascent. We have reached the critical moment in this report. We have exposed the Bloomberg lie. We have tracked the J.P. Morgan vault drain. We have revealed the U.S. government's panic buying program. And we have set the clock for September 3rd. If you understand what this means, if you recognize that we are watching the transfer of global financial power from west to east play out in real time through the silver market, then you need to be part of this community. Subscribe to this channel right now. Turn on all notifications. Share this video with anyone who owns silver, anyone who thinks they understand markets, anyone who still believes the financial media tells the truth. Because the next 6 months will be the most deceptive, volatile, and historic period in financial market history. And you need to be here to navigate it. Now let me give you the final verdict. Here is the verdict. We have dissected the anatomy of a financial crime scene. We have looked at the weapon, the motive, and the getaway car. The weapon was Bloomberg and Reuters. They fired a coordinated salvo of fake news about a Russia pivot that was categorically denied by the very people they claimed were pivoting. The motive was desperation. The bullion banks, led by J.P. Morgan, were trapped in a short squeeze. They had no physical metal to sell, so they had to manufacture a paper panic to cover their positions. And the getaway car was the armored truck. While you were staring at the red candles on your screen, paralyzed by a lie, they were loading 2.8 million ounces of physical silver out of the back of the COMEX. You need to understand the game you're playing. You're not investing in a stock. You're fighting in a resource war. The entities on the other side of this trade, the banks, the hedge funds, and now the United States government, are not your friends. They do not want you to own silver, because every ounce of silver you hold is an ounce they cannot use to build a missile. It is an ounce they cannot use to build a solar panel. It is an ounce they cannot use to back the new financial system that China is preparing to unveil on September 3rd. So what do you do when the next fake headline hits the wire? You do not panic. You look at the vaults. If the price is crashing but the vaults are draining, you know it is a lie. You know it is a sale. We are entering the final 6 months of the accumulation phase. The clock is ticking down to September. The supply is gone. The banks are naked. The government is panicked. And the price is a lie. Subscribe. Stack now.